Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Qualcomm. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both you short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations. So let's get right into it. So Qualcomm is a wireless technology company. The company is engaged in the development, launch, and expansion of technologies like 5th generation 5G. The company operates through three segments: the QCT, which is the Qualcomm CDMA Technology segment, the QTL, which is the Qualcomm Technology Licensing segment, and QSI, which is the Qualcomm Strategic Initiative segment. It is specialized in offering 3rd generation 3G, 4th generation 4G wireless technologies, and 5G wireless technologies. Its offered technologies and products are used in the mobile devices and other wireless products, including network equipment, broadband gateway equipment, consumer electronic devices, and other connected devices. Its technologies and products are also used in the industry segments and applications beyond mobile, including automotive, computing, Internet of Things, and networking. So let's go ahead and look at some news of the company. So the stock had a huge dip today, and I'll get into that, as a chip supply constraints hold back some sales. Now, while Qualcomm does not make the chips that are holding up automotive plants, the company works with some of the same chip contract manufacturers that are backed up. Now, I wouldn't worry too much about this news in the long run, because this is a short-term supply chain problem that will eventually get sorted out. In other news of Qualcomm targets Huawei opportunity. On an earnings call, Qualcomm CFO Akash explained until recently Huawei was a very large OEM whose chipset demand was satisfied by its high silicon unit. But with Huawei smartphone shipments rapidly dropping right now, he noted Qualcomm was poised to pounce on the company's approximately 16% chipset market share, flagging this as a significant growth opportunity. That's definitely good news for some growth opportunities. Now let's go look at some of the fundamentals of the company right now. So the company currently has a market capitalization of $187 billion, with the company's most recent revenue that puts it at around $23.5 billion a year, with $5.19 billion in earnings. It's projected to have a revenue of $33 billion in 2023, with an estimate of $7.9 billion in earnings by the end of 2023. As you can see here on this graph today, it basically took a nosedive, but I'm not really too worried about that, and I'll explain that later on. But let me bring it back here. So we got to look at some analysis on valuation, profitability, financial strength, and growth rates analysis on this stock. So go ahead and looking at the valuation analysis. Because Qualcomm is in the semiconductors and semiconductor equipment industry and has positive earnings, the PEG and PE ratios are the most appropriate valuation measures. The price to book ratio I excluded because it definitely underestimates the company's book value by overlooking the hidden assets such as the intellectual property of Qualcomm. So the price to sales ratio is not as meaningful as the PE or PEG ratio due to the company's positive earnings. Therefore, Qualcomm seems valued at a discount right now, with a PEG value of 1.61 times, one of the lowest in the semiconductor and semiconductor equipment industry, although their PE ratio is 35.83 times, in line with the industry median of 42.17 times. Now, looking at the profitability analysis, based on its gross margin, operating margin, and net margin, Qualcomm converts a large percentage of its revenues to profits than most other companies in the semiconductors equipment industry. Furthermore, the company is profitable with an operating margin of 25.17%. Now, Qualcomm does pay an annual dividend of $2.60 a share at its current price right now. That yields about 1.60%, a level that is in line with both the semiconductor industry and the S&P average. Additionally, the company is in the minority, as few others in the industry actually pay a dividend at all. And now looking at the growth of the company, earnings growth at Qualcomm outpaced revenue growth over the trailing 12 months. This is a trend that is not sustainable if profits are to continue to grow at this rate, though. However, this result was better than that of the average company in the semiconductors industry, where earnings fell over that period, so I'm not too worried about that. And then looking at the financial strength and balance sheet of the company, although it reduced the percentage of debt while debt used in the capital structure this year, Qualcomm has a debt to total capital ratio of 72.13%. And that is among the most highly leveraged companies in the industry. But with an interest coverage ratio of 38.3 times and a quick ratio of 1.84 times, the company should be able to comfortably repay its debts. So I'm not too worried about their balance sheet right now. So what do the analysts say on this one? Now, the analyst consensus is a moderate buy right now. The average Qualcomm stock price target over the next 12 months is $169, with a high estimate of $200 and a low estimate of $124. So trading at $145, that seems like a good discount for me. Now, going over one of the analyst reports, the Ford Equity Research Report has a strong buy recommendation, and they project that Qualcomm will strongly outperform the market over the next 6 to 12 months. The company has enjoyed a very positive trend in earnings per share over the past 5 quarters, and while recent estimates for the company have been raised by analysts, Qualcomm has posted better than expected results. Based on operating earnings yield, the company is about fairly valued when compared to all the other companies that they cover. The share price changes over the past year indicates that Qualcomm will perform very well over the near term. So, and also looking at the other analyst reports, the Street Ratings, the RT Research Team, and Market Edge also have buy recommendations on this. So my buy, hold, or sell recommendation on Qualcomm right now, here are my thoughts before I give you that answer. When I look at Qualcomm stock, I see that it remains surprisingly cheap relative to its growth potential. It's resolved most of the legal challenges it had in the past, including its clashes with Apple and Huawei that throttled its growth in the past. And it also pays a dividend yield of 1.6%, which is great. Qualcomm is the biggest supplier of chips that help mobile phones connect to cellular data networks, providing chips to Apple and other handset makers. But the company is also building out businesses, supplying chips to automakers such as General Motors, which last week disclosed a deal to source chips from Qualcomm. That was great news. And challenging Intel Corporation with new processors for laptops and desktop computers. Two of the company's newer business lines, the radio frequency chips to help devices handle new 5G signals, which is huge, and Internet of Things chips for devices such as wireless headphones, have now become $1 billion per quarter businesses. I also need to look at Qualcomm's profit stream. You got to look at that. Where's the profit stream going to come from? What many investors miss is the massive revenue and profit stream that is realized by the company's robust licensing business known as Qualcomm Technology Licensing, the QTL. This is the part of the business that licenses out its broad portfolio of standard essential patents and non-standard essential patents that the company holds as key contributor to the 3GPP, which is the body of contributors that develop and approve mobile standards. With a multi-billion-dollar research and development budget and a number of key patents for 3G, 4G, and now 5G, Qualcomm's contributions and patents are a requirement of virtually every 5G device. So you have your 3G, 4G, and 5G device. Qualcomm is inside this phone. And therefore, Qualcomm's hold licensing agreements with every device maker on the planet. That's kind of huge. This is a huge company. This means Qualcomm generates a royalty from every mobile device shipped. While this model in particular's broad system level licensing has faced scrutiny in the past, the company has a long runway. Now, Qualcomm had to answer to the Federal Trade Commission and spent several years battling with Apple. Now, the new CEO's focus will be putting Qualcomm's research and development and diversification strategies into the spotlight as the company seeks to expand in the leadership in the radio frequency, automotive, and artificial intelligence and Internet of Things. Now, if, and that's a big if, folks, Qualcomm can manage to focus on its product development and licensing without the disruption of litigation and regulatory interference. We'll see about that. The company is set for immense growth in the next 2 years as its core businesses and adjacencies are primed to scale in developed and emerging economies. So I am a bull on Qualcomm in the long term, targeting a share price of around $175 to $180 a share over the next 12 months. I see this dip at $145 a share as a buying opportunity to get into the stock at a good price. For the short-term day trader investors out there, you could profit on the volatility swings of the company over the next few months, but that's up to you. That's a little bit too risky for my blood. I'm a hold long position. So there you have it, folks. And always don't forget to smash that like button down below, and definitely consider subscribing to this channel and hit that notification bell if you like to hear daily stock reviews and recommendations. Until the next stock update later today, folks. Ciao.